We are bringing in Craig Bolanos, the CEO and founder of Wealth Management Group. Always nice to see you, Craig.
Great to be with you. Love your show. What are we talking about today?
It's that time of the year. We want your common sense on buying holiday gifts. You could buy someone an Apple product or give them a share of Apple.
Well, you're right. Let's put an investment theme on this. So instead of helping everybody off of their Amazon shopping list, let's go ahead and talk about the gift of money, the gift of stock, how to do it. The first part is if you want to be very, very generous, just remember that there's an annual gift amount. You can only give $18,000 per person. So if you're thinking really about being generous, make sure your generosity doesn't extend beyond $18,000 per person. That's the annual gift amount this year. But Angela, I don't know about you, but I grew up in a world where people got savings bonds. You remember those?
Absolutely. Savings bonds help pay for college.
They did. So the interest rates might not be what they used to, but I remind everybody, if there's a little bit of nostalgia and you want to give the gift of a U.S. savings bond, those double E bonds that double every 20 years, or I bonds, which is a fixed rate plus a inflation adjustment, hence the I stands for inflation. All of those can be accessed through Treasury Direct, and you can go ahead and give those to the ones we love. But Angela, if I know something about you, you're probably not giving savings bonds. You want to talk about giving away stock.
What's your common sense on giving stocks?
If you want to buy someone shares of a great company of America, you can, but maybe you're better off gifting existing shares of a great company of America that you already own. Why do I say that? Angela, for most people, if they have to sell stock to raise cash, they end up paying capital gains taxes at a rate somewhere between 15 and 20% for long-term capital gains. But when you gift shares of a stock that you've already owned to a minor, and that minor chooses, or a young adult chooses to sell that stock in the future, if they're in the two lowest income tax brackets, which most young people are, 10 to 12%, their capital gains tax rate is only 0. So I think gifting existing stock to someone you love is a great way to possibly save on taxes. But Angela, the most important thing is, speaking of leverage, should you gift through a custodial account, a custodial Roth IRA, or the granddaddy of all, which are 529 savings plans? Each one of those have their unique pros and cons, and I encourage people to work with a trusted professional to find a way to create financial leverage for their gift coming into this holiday season. Angela, we'd love to connect with people. Go out to our website, investwithwmg.com. That's investwithwmg.com.